a lot of our clients, I almost get this day in, day out, they don't know the difference between an accountant and advisor, I think is the first issue. And it really comes back to understanding they have two very separate jobs. The way I like to think of an accountant is almost like the GP practitioner, right? Your general practitioner, the generalist out of the medical profession. But they're also the gatekeeper, the one that understands broadly the concept of every single financial aspect in an individual's life and in their business as well. But it comes a point where there's specialist advice that needs to be delivered. And that's usually at the point when you understand there's either a problem or there's an objective that's outside of their scope. So the first thing to understand is that a financial advisor and an accountant have two very distinct, different jobs. An accountant is there to help you minimize tax, review, mirror, right? They're looking in the past and what's happened. Whereas an advisor is very forward-looking. It's about what can you keep to build wealth. And so once you get that understanding and you're able to get an accountant and advisor on the same page, then you're getting the outcomes that you want. Without it, you've got a major gap in the middle because you've got two very different opinions. And again, it's just naturally how those individuals are. An accountant's always looking in the past, whereas an advisor's looking forward, and you need to bridge the gap.
It's almost neutralizing the position, right?
And that's why you've got to have them in the same room. Otherwise, they've got different... they'll steer in different directions, and the client, as we see it, needs to be at the middle, and it's always got to be about their circumstances.
I think we're discussing this the other day. You kind of debriefing me on a radiologist who was, had a billing company of about 200,000, had a PAYG of about 500, and really just looking at buying his first home, which quite amazes me, right, for being in that position. But it all came down to different views between the professionals that he had working with him.
Different views. And again, it just amazes me. $700,000 of income, and he's being rejected in terms of trying to apply for a loan for his first home. So let's break this down a little bit. $500,000 he earns at the hospital. Okay, so he earns that as a salary. So, after taxes, is roughly about $300,000 of income that he has. So that's his net income. Now, he was doing some locum work and some private work as well. And the accountant, rightly or wrongly, I'm not here to judge tax advice and what's right or wrong. But the accountant said, look, let's just put that income into a bucket company so you don't have to declare the income. Anyway, 2 years later, he's got $400,000 in this company, in a billing company. He's continued to earn his $500,000, so he's got a bit of savings as well outside of the company. But he seems to not be able to get the $2 million loan that he wants to buy his first home. And I want to ask him the question, why? Because well, I'm a first home buyer, I should be eligible for all of these things, and I've gone to a lender that specializes in first home buyers. So, dude, you're not a first home buyer. You are buying your first home, but your structure is not that of a first home buyer. Your structure is that of a self-employed business owner. Nothing to do with medical as well, right? A lot of people have similar structures like this. And again, it's just having the wrong people in the room. Again, with this situation, I guess what we've found is there is quite a significant opportunity. The problem he came to us was, I've got $400,000 in a company, and if I take it out, I've got to pay tax on it. It shouldn't have been there in the beginning. To begin with, there could have been other avenues for us to accumulate and invest that money elsewhere. But I guess, long story short, what we're able to do was assess, how do we now turn this into a source of income for you, right? Yes, eventually you will need to pay tax, but if we now invested that $400,000 that's in there, it's now producing an income for you, okay? Outside of outside of the company, how can we structure your income to show the banks that you've earned this money, to be able to help you achieve your goals. But do we even need to go there if we're actually speaking to the right lender to begin with?
So, Abe, I just wanted to run this scenario with you, right? Imagine I'm a 2 to 3 year reg, mid-30s, I'm looking at starting a family. Do I actually need all these professionals on my team right now?
Great question. In my view, you're absolutely going to need an accountant.
Yep.
I think everyone just has to do their tax returns, and there's a lot of missed opportunity by doing it yourself. But again, accountants are only looking at what's happened in the last 12 months. You do need a financial advisor and a financial planner to be that forward-looking and helping you keep what you've actually earned.
Yeah.
Having these two guys in the same room at this point in time now helps you with not only your tax returns and also how you invest. It's also about protecting your wealth. It's also about cash flow planning, family planning. This all comes into play now. And again, just having two simple professional advisors in the room, being your accountant and your financial advisor, I guarantee that goes a long way towards giving you clarity with where you should be.
Yeah. So you're pretty much saying that's the backbone that you need.
That's the backbone. That's the team that you need.
Fantastic. You touched a bit on education bonds.
Yeah.
What does that look like for, I guess, me starting a family?
That's why it's really timely. I mentioned before, it's about when do you want to start and applying that time frame.
So, Abe, you touched on education bonds. Could you just clarify what that is?
Yeah, excellent. Look, an education bond is basically an investment structure where people can invest their money, and it doesn't actually the income that this generates doesn't show up in your tax return.
You're brilliant.
So, okay, absolutely brilliant. And so potentially if you've held the asset for over 10, and I'm not the best person for this, by the way. Aaron's a technical guy.
Maybe just do a short snippet of it and then we'll just jump in.
Okay, so...
Because you did a full one in the last one.
Yeah.
But I think you might just kind of just do, like, you can almost finish where you talked about how it just saves and that's it.
Look, an education bond in a nutshell allows you to invest money and potentially pay zero capital gains tax after 10 years. It's a really powerful investment structure, and a lot of our clients and the providers actually market it as education bonds or education funding for your kids. Now, again, you know, imagine you're in mid-30s now as a registrar, you're probably starting to feel your help debt right now. Yeah. And so I'm sure if you're starting a family, you're going to want to help your kids later on down the track to not be in the same position that you are. And so this is a really powerful tool to invest for your kids without having to worry about the tax that's associated with that.
Yeah, fantastic. So we've touched on the, you know, second to third year reg, but how about if I'm a second year physician? What does that look like then?
2 years out as a consultant or as a physician, you're probably starting to now think very seriously around big purchases, big investment decisions, and making those decisions. You're going to need a little bit more in the room. So you'll have your accountant. He's got the foundation of your income and how you earn your money, how to save you tax. You've got your advisor now who's also helping you invest, helping you structure for wealth building. Having a lender in the room and having a buyer's agent, I think at this point in time, now really helping you decide your pathways on your plan, right? But building that portfolio. Portfolio is not just property, it's also shares. And so that's why you want to have these guys in the same room so everyone's aligned and not pulling you in any one direction that's just about them. Again, remember, Mr. Client, you have to be in the center of it because it's all about your goals. That's what we're here for.
Fantastic.